Trevor.
Okay.
Oh my gosh, Trevor Thompson. That guy follows me around everywhere I go, Stefan.
I do. Nice to see you.
Nice to see you.
Okay. So hi everyone. This is Finance Meets Real Estate. We meet here on Tuesdays. As some of you know, today is a Wednesday, so a bit of our usual schedule. But we have an amazing guest here today, Charles Dobens. He's an attorney, multifamily investor as well. So he's the founder of Dobens Law, and he is also the founder of Multifamily Investing Academy and Multifamily War Room. So he has personally acquired over $20 million of apartments and has been involved in over $3 billion in transactions as well. So he's an attorney and consultant as well to multifamily investors, and he has created a step-by-step program, the Owner Forum, that shows new investors to seasoned professionals how to get started in the multifamily real estate investing business. So it's a real pleasure to have him here today. If you guys have any questions, feel free to ask them or put them on the chat. We're doing an open Q&A format, and I'm going to be asking my questions as well. So feel free to chime in at any point you feel comfortable. And with that, I'm going to pass it on to Charles.
Oh, thanks, Stefan. I just want to bring up to speed. I've just rolled out a new platform, a new program called the Multifamily OS, Multifamily Operating System. And basically it's, we focus on building a multifamily real estate business. And that's the thing. It's not just buying a property. It's actually most people have big plans and goals, and the only way they're able to accomplish that is by building the systems in a business. So I through the Multifamily OS, we teach new investors how to build a business of multifamily real estate investing.
Well, that sounds amazing. And does that Charles, does that include also marketing funnels and things like that, or is it on the more which kind of aspects of
okay. That's a great question, because anyone that builds a business knows that the most important aspect of multifamily, the most important aspect of any business is sales and marketing. And I teach right from the very beginning, who are your customers in the multifamily business? And most new investors can't even tell you who their customers are. The customers in a multifamily business are your investors. They give you money just like a customer does. And then the owners of the property are also your customers, because that's your first sale. Getting an accepted offer is the first sale in your business. Until that time, you're not in business. And then I also include in that the brokers as well, because the brokers are essentially agents for the owners. So your three customers in the multifamily business are investors, owners, and brokers. And so what we do through the Multifamily OS platform is we teach people and we help them create that sales and marketing system and the funnel. When you sign up with me, you actually get your own VA who's trained by me and works for me, but they're doing the work for you, along with my custom designed customer relationship management tool. We evaluate what we call your buy box, your markets, the types of assets you're looking for. We evaluate that, and then using CoStar, we capture up to 1,000 properties that meet your fit and put them into your CRM. So on day one, you've got 1,000 customers that you can go after. And we teach you, we've already got all the direct mail letters set up and ready to go. So yes, the most important aspect is sales and marketing of any business, and especially multifamily as well. And I can tell you from all the students and clients that I have worked with over the last dozen years or so, I can tell typically on the first phone call if that person's going to be a success. And the one common denominator among all successful multifamily investors is that they come to the table with a background in sales and marketing. I love telling the story of one of my students who started with me with 0 units, and now he owns over 6,000 apartment units. And he was a manufacturer's rep for 35 years, selling up and down the East Coast. And I knew when we got started that he was going to be a success, and he did not let me down. That's for sure. So you're absolutely right. That it's a business. Even you look at the, I can never remember where it is. Ready, Fire, Aim. The book Ready, Fire, Aim by Michael Masterson. Chapters 4 and 5 will tell you exactly what the new entrepreneur has to do to be successful.
Mhm. Yeah, I'm sure that's can save a lot of time, right? To so many people, it can take years to build it up, like for funnels.
Right.
The time to
Right.
spend.
And so what it did is even for those people that don't come to the table with that type of a background, I got you covered. We've already got the system in place. We'll implement it as soon as you come on board.
Mhm. When you say background in sales and marketing, is it, necessarily that's the educational background, the common denominator for the ones who
Well,
succeed?
what I mean by that is really just you understand it's prospecting. You got to
Good.
get out. These deals are not just going to drop in your lap. You got to get out there and beat the competition.
Mhm. Yeah, you kind of build up your online funnels and automations and all that.
Exactly. Yep.
More technical, right? It's the field has really changed, like the marketing field, quite a bit, I feel.
Yeah, but but the way to get to the best customer, which are the owners of the property, is still the old-fashioned way. Phones, postcards, direct mail. That's still the best way to get to them. And skip tracing, trying to make sure that you track down the owner of the LLC, those types of things. That hasn't changed. Brokers and the investors, yeah, we're going to keep them on a funnel and keep in touch with them, throughout the whole process. But to get to the owners, I mean, think about it. That's how the brokers are finding these owners. They're just cold calling, and essentially that's what we do. We do the same thing. We have to.
In your attorney practice, so you're like a securities attorney, right? Presumably.
No, God, no, never. I would never. I farm out all my securities work. I am a multifamily real estate transactional attorney. But as I tell my students, I am an attorney. I am not your attorney. You are going to hire an attorney. And I give them all the documents they need, but I clearly say to them, listen, my purchase and sale contract is not valid in all 50 states. You need to have local counsel to verify that the contract is right. There's a provision that is required. I believe it's about 12 states that require one special provision. And if you don't have that provision, your contract is not a valid contract in that state. And it's called independent consideration. And Texas, if you don't have an independent consideration provision in your real estate contract, it's a voidable contract. So that's why you always have to have local counsel review your contracts to make sure it's good. I mean, my contracts are drafted after I've done this for so many years. I have get out of free jail cards, as I put them in the contract, that protect the buyer, my client. Let the seller negotiate it out, but we still want to put them in there to protect the client, my client.
And so you have like your co-founder of the multifamily war room. So what exactly is that?
All right. Well, that was something what I did with Jillian Sidoti, who was a securities attorney. And so she handled the securities side, and then I handled the transactional side. And then she went off and did her private money rock star. And then I've now built up the multifamily OS. I decided, listen, that securities side is really becoming a commodity. And I said, listen, I just really want to focus on helping people buy properties and build a business. And that's why the OS came about, because I didn't see anybody out there teaching people how to build the business of multifamily. And that's the only way here I am teaching people how to own 1,000 apartments in 5 years. You don't get to 1,000 apartments in 5 years by doing one transaction. It requires a series of acquisitions over a certain period of time. And the only way you can do that is if you've built the business with the systems in place to be able to run that type of lifestyle for you.
Mm-hmm. And so I guess I'm sure you guys have your proprietary parts like within multifamily OS, but for like general advice, let's say to our audience, like what are some some ways you have found useful in like building your business, such as like, like some operators, they really like using, like Active Campaign and, like in comparison to, let's say, using just MailChimp, and just in terms of like various tools out there, that could be, that could help you in like you said, like building your, organizing your deal flow, or building your deal flow, or reaching, or be it like automations that help you reach to the various owners, etc. Like, what are some of the tools you personally like?
Well, what we've done is we've actually partnered with, let me just see if I want to get there, REI. Let me see if we get this. Yeah, so the company that we've worked with, let me see if I can pull it up for you here. Let's see, I'm gonna post it in the chat box. This is one company that we have an affiliate relationship with, because we've written all their direct mail for multifamily investors. And so our clients get access to this. And the thing is, Stefan, we focus on, and this is going to shock you, but all we look at are the results: postcards, oversized postcards, color postcards, pictures of the person's property on the postcard. That's the best return rate we've ever had. And the reason for that is because a postcard is seen by more people than an envelope. An envelope, the person opens it up and looks at it. A postcard, everybody that touches it sees what's on that postcard. So everybody in the office can see what's on that postcard. And if we really, can personalize that card by putting a picture, nowadays with Google Earth and what have you, we can put a picture of the guy's property on the postcard and say, we want to buy your property. And those are the ones that we've had the best luck with. And then also with the VA following up, I use what I call the rifle and the shotgun approach to finding brokers. You want to find those brokers in the market that are doing the job. We use CoStar, we use LoopNet to identify those brokers, and then we just set them up into our systems and our funnels to make sure we're always reaching out to them. And but still, it's still a lot of shoe leather, and you never hang up the phone with a broker without saying this one sentence: are you working on anything else that I can take a look at? Before any conversation with any broker, hey, by the way, are you looking at anything else that I can take a look at? That just opens up doors like you can't imagine.
Mm-hmm. Yeah, so sort of an alternative route referral of kind.
Yeah, exactly. And it really makes the broker, you just ending up with great conversations. Hey, listen, I know this one didn't work out. I appreciate you giving us a crack at it. But while I have you on the phone, is there anything else that you guys are working at? Maybe something back in underwriting that is coming up that I can take a look at before you let it hit the market? And that's all you say. Makes them think.
Postcards. I mean, I know like people have different opinions like on this kind of direct mail. So postcards, so you don't need to open an envelope, but then on the other hand, it feels like it's a little bit easier to discard it if you don't need to open anything. But then you're saying perhaps if the image is catchier, such as has like the image of the property and sort of makes it a little bit more relatable and personalized, then that could be that's something that's working for you guys.
We get people calling up just to ask, hey, how'd you get a picture of my property? Like, oh, really? Come on. I mean, haven't you ever used Google Earth before? Where do you think I got the picture of your property? But yeah, I mean, that's what happens. It's fun. And and from a cost-effective standpoint, it's the best way. It's the most cost-effective method of direct mail. It works. It's worked every time we tried it.
Mm-hmm. So what kind of conversion rates do you guys see? No secret.
You're still looking at down in the low 1% to 3%. That's just typical of direct mail. But but the thing is, and this is key, and you've heard me say it over and over again in this conversation, it's a system. You've got to put the system on and set it and forget it. And if you do one direct mail campaign in a month and say, well, it didn't work out, guess what? You get out of the business now. Quit wasting everyone's money. Direct mail only works when it's systematic and you do it every single month consistently. Because the thing is, You just want to ask people to sell you their property more and more every single month because people's reasons for selling change overnight. Somebody died. Somebody got divorced. Someone just got a letter from the IRS. Oh man, where's that guy? Who is that guy that keeps sending us those postcards? He wants to buy the property. That's how the deals get done.
You guys do like monthly follow-ups or quarterly or?
Oh no, we do it every month. We do it every month.
Wow.
Yeah. So our annual campaign, every month we have a different mailer that goes out to the people. Yeah. Yeah.
A different one though. Mm-hmm. And then what
Yeah.
about electronic? Like, has that picked up and become perhaps more effective for, like picking up emails, let's say emails data from be it CoStar or other sources for some of the owners and then trying to reach that way? Have you had success with that?
Yeah, there's a function in CoStar that does allow us to do that. You've got to be very careful with spamming on email. I mean, you never want to get into that realm. So you really have to do it in a different manner. If you look on LoopNet, they have a function where you're able to send out messages to the brokers. You do 25 a day. And, we have the VA knows exactly how to do that. And they set it up in a system, they do it. And Stefan, after 25 in one day, you get shut off because LoopNet thinks you're spamming these brokers. And fact is you're spamming these brokers. You're doing it every, 25 and then they shut you off and you got to wait until tomorrow, turn it back on and start all over again.
Got it.
Yeah. You don't want to, but the thing is you can get those email addresses from CoStar for all those types, all split up as to what type of people you're going after. But you got to be careful about doing any type of blast emails. You have to make sure that you're doing it correctly. Even the vendor that you use is going to make sure that make sure that you're not blasting these people.
Yeah, exactly. What do you think about kind of a side question, but what do you think about the current market? You worried about a recession and stuff like that, or what are your?
Well, the thing is that I got caught in the last one, so I saw this one coming a mile away, and everybody kept saying this one's different. This one's different. I mean, I mention it all the time. I had a great podcast on my podcast with Ivy Zellman. She's brilliant, and she called the last housing crash. And she said, we're in it again this time. And she's absolutely right. And it's just making, say again?
Ivy Zellman is her name?
Yeah, Ivy Zellman. Her name of her company is Zellman Associates. They're out of Cleveland. They're owned by Walker Dunlop, which is a great DUS lender, Fannie and Freddie Mac lender. And they purchased her company and she just gives housing data analysis. And I had her on my podcast and I said, Ivy, this market's different than it was last time. Last time, if you fogged up a mirror, you could get a mortgage. And so I feel as though the underwriting is more sound than it is now. And the demand for our product is so high right now. I feel as though we're in a different type of market than we were back in 2008. And she said, nope, you're wrong. I was like, okay, please explain. And she said that the housing market, we are already overbuilt. And I said, Ivy, I mean, I'm sitting here in New Hampshire right now. We got a 1% vacancy. She goes, Charlie, the reason why we're in the situation we are now is there's so much cash sitting on the sidelines looking for a place that they're just running up the price of these homes, making it harder and harder to buy. And the difference with this is many of the homes that are being acquired today are second and third homes of people. And when the market turns, when interest rates start to go up, they're going to dump them. And then we're going to have a glut. And if you go back and you look to see how many housing starts have been approved and are in the drawing board right now and been approved, it exceeds the demand. So when you have people dumping the homes in the market, and she went after BTR, build to rent, she said that market is going to get hit the hardest. and we are actually seeing it now in some of these markets. So from the demand standpoint, now we're seeing the interest rates starting to creep up. We are now underwriting our deals at a full percentage point higher than we did about 2 months ago, and we're already seeing. And I have people, my clients are all over the place. We're seeing deals falling through right now because of the change in the interest rates. And that is going to have we saw some incredibly stupid deals over the last 6 months in places like Houston and Atlanta. And when I say stupid, they're the type of deals that Warren Buffett wouldn't even touch, wouldn't even go in. So that's the type of thing that we see. It's starting to happen now, and there's going to be a feeding frenzy. I was on the wrong side of it last time at 2008. I had to give back some of my properties to the bank. This time I feel as though I'm on the right side. I'm just waiting because there's going to be a lot of opportunities. A lot of these newbie syndicators are out there who were in school back during the last crash. They're going to find out what it's like to, find out that their property is not as valued as it was when they first bought it because the cap rates are starting to rise. And that's when things are going to really start to happen.
What did she say, like Ivy Zellman, what did she say? Are there some markets that are safer? What is her view on that?
She ended up there because I kind of pressed her on it. At the end, I said, Ivy, you work for Walker Dunlop. They own you, and they make their money selling mortgages. And here you are out here saying things are going to get bad. She says, listen, they leave me alone. They let me say, what I want. And she finished by saying, listen, there are always going to be deals in every market. You just have to get out there and find them. And she's absolutely right. That's the name of the game. It's the most successful investors are the ones who get out there and do their research and say no more than they say yes, and are patient.
Mm-hmm. Okay. So we have a question on the chat. So how do you guys suggest we start our multifamily business as beginners, just getting started into real estate? What's the first step is what I'm trying to say. Yeah.
So you want to learn, you want to educate yourself as to exactly how it works. I think multifamily is the best business to be in. It is so incredibly logical. Every aspect of it for me just makes total sense. And it's very important for you to get out there and look around. The first thing you really want to understand, if you're looking to start a multifamily real estate business, in addition to learning the basics, cap rates, NOI, all that type of stuff, we teach all that type of training. You also want to be able to find a market that you want to build that business in. And that could be your own backyard. It could be where you picture yourself being 5 years from now, or it could be a totally different space. There's no right or wrong answer as to where you build your business. But whatever you do, make sure you become an expert in that marketplace. Because if you have to go out to the market to find investors to invest with you, you're going to have to be able to explain to them and educate them as to why that market is a good market to be in. We teach so many different lessons on what is making sure you go and look to the strategic plan of a particular market. Every state has a state law that requires every city and town to do a 10-year strategic plan. If you're looking at East Oshkosh, have you pulled out the strategic plan of East Oshkosh? Do you know anything about that town where you can go out there and educate investors as to why you're deciding to put your money in that particular marketplace? Become that expert. Even sign up for their newspaper. Make sure you get because I'll tell you something. A couple of my clients, they now own 3,000 apartments. They started out buying duplexes off of Craigslist and classified ads. You just have to hustle. I mean, I have a whole training, about an hour and 45-minute training video on how to find deals where no one else is looking. And that's I've learned that over the years, but you just dig and dig and dig and find those deals where no one else is looking, but also get to know your market better than all the other competition. If you have to ask a broker, what is the cap rate in this marketplace, you failed.
Mm-hmm. Yes. So another question. So how do you manage properties from another state?
Yeah. So you can hire third-party property managers. I did that early on. Then I have a friend of mine who the name of his company is In Focus Property Services, infocusps.com. He's an accountant and he handles all the books and the financial aspects of all the property management for companies. And the guy does a phenomenal job. So when I was getting started and I had about 4 complexes under my belt, I had third-party property management. And I tell you, if you can't make it as a bookkeeper, you go to work for a property management company. And the books I would get back from my property manager were terrible. And it cost me $6,000 for one property just for my accountant to clean it up for the taxes. And you would always get your reports late. They would never be right. There were nothing that you could manage any problems with because they were always so old. And so I went to my buddy, Jeff at In Focus Property Services. And I said, how do you solve this problem for me? He says, I handle all aspects of the property management from the financial side. The third-party property manager are boots on the ground. And I said, great. He goes, and let me just tell you something. Within 90 days, you're going to fire all your property managers and you will build your own property management company and I will have everything set up for you to go. And he was absolutely right because I got to see how badly the third-party property managers were managing our properties. Nobody loves your baby as much as you do. And I was, it was terrible how they were spending my money. So after I got to a certain critical mass, I started my own property management company. And that's what I teach my students because within the multifamily business, there are 5 ways to make money. One of the most consistent and safe, one of those 5 is property management fees. When you build up your business and you get to a certain level, that property management fee that no longer goes to a third party, but now goes into your pocket, allows you to quit your job. It allows you to pay your mortgage consistently. It pays your kids' tuitions. And it gives you that safety net, that consistent monthly fee that you know that you'll be able to pay all your bills. The assets, the multifamily properties, that's what makes you the millionaire.
Mm-hmm. Yeah, that makes sense. That's a good idea there for actually having an income out of it as well.
Yeah.
Just building up equity and so forth, which is the primary goal, but one does need income as well. And so another question, so duplex, triplex, fourplex, almost all these properties are all now double or triple the price in this hot market. How do you know you're still buying a cash flow property with all the high price tag?
Yeah, I tell you, be patient. Be patient. Those prices are going to come down, especially with that demand overbuilt. Then we're going to have, you're going to see some of these values come down. Now, first up, the duplex, the triplex, the quad, those are residential. So I do multifamily, I do commercial. So it's 5 units on up is really the threshold change. So that's the difference. But listen, the concept is still the same. We're in a very hot market. You're going to see a change soon. Be patient, because what's going to happen, those people that overpaid for those properties, you always have to think, there are 2 things you need to think about when you're buying a property and making an offer on your property is, what's my exit strategy and how do I get this deal financed? So these people are now starting to sweat about what their exit strategy is going to be, because if interest rates have climbed by that much, your potential customers for selling your deal are drying up. They're not going to be buying your product and the prices will come down. And that's when you want to jump. That's when you want to get involved. So remember, you don't have to own. If you don't have to buy right now, don't wait. Be patient.
Mhm.
Yeah.
Well, after 2007, it took like about 4 years for for prices to bottom.
I know.
It was a
Yeah, but
while.
the thing is, the thing that also happened almost overnight, where you started to see a lot of those properties coming back to the what are called special servicers, essentially getting foreclosed on. There are services that produce that information that you can subscribe to get it. I know CoStar has been talking about providing that service. My rep from CoStar, I've got to call into him to see where I can find that information. But the other service that provides, it's a company called TREP, TREPP.com, and they keep track of all the delinquent mortgages and what have you. Another website you want to look at is BauerFinancial.com, BAUER Financial.com, and that's a bank, a listing of all the banks. So find your market, go on Bauer Financial, drill down on all the banks in that particular area, and start reaching out to their real estate owned divisions for multifamily property. Some of them you'll actually see they have it on their website now, but that's another great way to do it.
That's BAUER, Bauer Financial.
Yep.
Yeah.
Yep, like the hockey skate.
Yep. That's great. And well, so what do we have? One second. Do we have another question? Yes. So acquiring 5+ units at one time requires a lot of capital. Is it more practical to slowly build up wealth to make the first deal independently, or find investors? If investors, how do we pay them back, and what is a fair way to structure that deal? Well, it could require no capital as well with many syndicators in the space. So.
Right. So, okay, you can always, like Stefan just said, you can do it no money down, but that doesn't mean that you show up at the closing table with no money. That means you didn't bring any of your own money to it, but you brought investor money into it. Now, the question is, like, how do you do it? I have a great lesson in my training program that I did. It's called A Tale of Two Investors. And I have one investor that buys it all on his own. And I have another investor that does syndications for every single deal. One investor has about 400 units. The other one has almost 4,000 units. But yeah, I have to understand the difference in lifestyle for those two investors. The one who's got 4,000 units, he's got a little bit of a lot of properties, and he doesn't control those properties. Somebody else, or the GPs, which he is a GP, a general partner for some of those deals, but he's got to answer to a whole lot of other investors. The other guy has a wealthy, and I'm just going to say this, and don't think, well, I don't have one of those, so I can't do it. He has a wealthy father-in-law who will lend him money. Okay, so the way he structures his deal, I'm going to tell the two different deals. The way he structures his deal is entirely with debt. His father-in-law, and it could be anyone, will write him a check for the down payment. He goes to the bank and finances the other 75 to 80% LTV. So he's got all debt on the property. He rehabs the whole entire thing, repositions it, and then refinances it and pays off his father-in-law. Now he owns that property all to himself. Now, my other client, who's gone out and syndicated the deals, when he and his partner GP, or lead the syndication, they put provisions in their operating agreement that say, at some point in time, we are either going to refinance, pull money out, and buy out our investors and pay them off, and then we own the property ourselves, or we're going to pull it out, refinance it, plow it back into the property, or pay off your distributions, and we're going to all remain in the deal. So it's a lot more flexible as to what they can do, but they leave themselves that same out where they're able to go out there and buy into the property, so that they are the only ones that own the property at some point in time once the property's been repositioned. So really, and to answer the question about what's the right return, you know what? I hate that question, I hate that question because you didn't give me enough information. You didn't tell me how much risk is involved in owning that particular property. Is it a performing asset, or is it a bare bones down to the studs gut rehab? So it really depends, and it also depends on what type of deals your investors want to get into. Some, grandma, you're not going to put grandma into a rehab and a repositioning. You put grandma in a safer property. So that's I hope that answers your question. But don't ask that question again.
So one moment. So another question actually. So do you know of any free websites or tools to use to run the numbers on multifamily? Now I mentioned like Michael Blank's spreadsheet, that is quite trendy in the industry, but that one is a paid one. So I'm not sure if you know any free ones.
No, guys, they're cheap. They're $97, $99. Michael Blank's is like $97. I use Doug Rutherford's cash flow analyzer. That's rentmanager.com. No, that's not Rent Manager. Rent Manager is the property manager. What is it? It's rentalsoftware.com, I think it is. I can't remember off the top of my head. They're all different. I like Doug Rutherford's for one reason. He's got some great reports, and you can actually print off an offering memorandum right off the system. Michael Blank's has a great feature where you're able to analyze rehabs and repositionings better. That I think that's what I really liked about Michael Blank's software. It was just it had that component that he really did a nice job with.
Mm-hmm.
Yeah.
Michael Blank, just like to clarify, it's just really a spreadsheet that anyone can build. It's just built in a relatively good way, where it's kind of accounting for as many factors as possible and has some exit strategies and all that. So I do like it too, but it's
Well, let me tell you that. Okay, so Michael Blank is like, I don't look at people as being competition or anything. He seems like a really nice guy. The thing about, so I use Doug Rutherford's. All of my students get Doug Rutherford's when they sign on with me. Some of my students come to me from Michael Blank's program and they say, can I use Michael Blank's software? And I say, no, you can't. I have to use Doug Rutherford's. And here's why. And this is unique to me. So I'm not saying it's a slight to Michael whatsoever. The thing is that Michael's, both systems are built on an Excel software, Excel platform. Michael Blank's is built on Excel. The difference is that Doug Rutherford has locked down his program so that you can't get behind the formulas. Michael Blank's, you can manipulate the formulas. So, I got 150 students. I look at all of their deals and I look at the Doug Rutherford's. I know that the numbers have not been modified. If I look at Michael Blank's and everybody's sending me Michael Blank's and somebody fooled around with one of the formulas, I'm not going to know. And then I advise my client, yeah, this is a good deal. You should go for this. Let's draft an offer and get it out the door. And it turns out the deal was terrible because he had fooled around with the formulas. So that's the real reason why I focus on Doug Rutherford's software, really to protect the integrity of my program.
Mm-hmm. Yeah, that makes sense. It's Michael Blank is not very much. It's easy to modify stuff, and there's no protection really whatsoever.
Exactly.
Also seen in the spreadsheet in that sense, but okay. Do you guys want to speak up? If you have any questions, if you want to.
This is the time of the program when we play Stump the Professor. Trevor Thompson will not undo his mic because he knows I will. He can't stump the professor. But let's see if anybody else can.
I'll say hi. How's that? I was going to call you dude, but
don't call me dude. Yeah. Okay, let me see. So when it comes to investors, the way to build is with knowledge of why is a purchase. Yeah. Is to have knowledge of the area. Yeah, that's right. With us demonstrating business plan and share. Yeah, that's exactly it. Austin, you got it right. You really have to consider the fact that you're dealing with with a business, and you've got to convince your customers that that you are a good, there's a lot of competition out there for the investor dollars. And you have to really educate people as to, first off, why multifamily, why you, why that market, why that property, and make sure that and the best way to do it. And this is one thing that we do with our customer relationship management tool from the investor standpoint is we tell you to keep in touch with your investor database all the time. Let them know everything that you're doing. Hey, I made an offer on this property. I'll let you know how it came out. 3 days later, hey, we got rejected in that offer. We didn't even make it to best and final. The prices were too high, but we're still looking for other deals. We'll keep you informed as we go. I'll tell you, we did that. My wife and I, when we were first getting started in this business, we did that nonstop, even before it was a thing, just because everybody, all of our friends and family wanted to be involved and know what was going on. So when we finally got that deal accepted and through due diligence and said, we're ready to rock and roll, everybody was ready to write the check, and we funded in 9 days because we had built up that knowing, liking, and trusting that people were ready to rock and roll. They knew we had done our job.
Mm-hmm.
Yeah.
So how do you go, let's say, more on the property side? Because you spoke about the marketing, let's say, on the property side, how do you go about perhaps in your program and not the direct mail, more like property selection, like what kind of criteria you like yourself as for what is a deal, like what defines a deal and so forth, and what do you think in that sense?
Well, one of the things is in our CRM, there's a place where you can generate a hyperlink of a online onboarding questionnaire for investors. So, it removes that uncomfortable position where like, hey, how much money do you have? What are you looking for? Let your potential investor fill out the questionnaire and it goes right into the CRM. That should give you an idea of what types of deals your investors are looking for. And those should be the types of deals that you are trying to identify in the marketplace. But if we're just looking at it from how do we build our business, you want to think about your strengths. I don't own a tool belt. So doing a rehab would be very challenging for me. But finding a non-performing asset, light fix that has a great value add component, like the rents are too low, that's a perfect deal for me. So I will go after that deal and focus on that. What types of properties? Well, having done this for 12 plus years now, I know what it takes to own and operate different types of properties. And when I talk to a broker, I say, I'm looking for 1990s or newer, separate entrances, pitched roofs, individually metered, and some type of a management issue that I can get in there and fix. And all of those, that elevator speech came about because I've owned so many properties and I know which ones are easier to own than others. Separate entrances. Those properties that have that one grand entrance where you walk in and all the units are are inside, you're going to have to pay to clean it. You're going to have to pay to replace that carpet every 2 to 3 years. The kids are going to hang out there and trash the place. You can't drive around and see what's going on in your building. As opposed to a separate entrance, you just drive around. You want to clean it up, go get a leaf blower, and that's the best way to clean it up. So there's a whole, that type of understanding of the properties only comes through time. Individually metered, don't you ever look at another landlord paid property again in your life. Oh man, whenever the tenant and the utility companies are in cahoots with each other against you, you're going to lose every single time. So, look for the next type of deal. So those are the types of things that I've learned over time as the types of properties that I want to do business with.
Then in terms of sourcing, something that's really creative, that is more like social media rather than direct mail, you have strategies like that. Like, let's say, you mentioned the residential space could be in the past, like Craigslist and places like that. So what about the commercial?
Yeah. I'll tell you, Stefan, the best, that hour and 45-minute video that I put together has some simple ways of doing deals and finding deals. Let me just give you one. Let's say you're looking in Richmond, Virginia. Just go to Richmond, Virginia, multifamily for sale in Google and hit enter. Don't look at the first page, look at the fourth page. And you'll find stuff back there that nobody else will ever see. That's where some people find deals and you're like, how'd you find that deal? Oh, I mean, I had one here in my hometown. I said, how'd you find big property that, you know, it's been around for years. I said, how'd you find that property? He goes, Craigslist. It's just because they were just, their job is to every day mine for deals. And, you know, you sit, I love football season is where I found my best stuff because I sat there watching football all day long with my laptop in my lap, going through and trying to find deals through all these different methods. I mean, housing authorities have properties that they want to sell. You just got to know to drill down and find them. I mean, it could go, it goes on and on. It just requires you to get out there and look. secounselors.com. Society of Exchange Counselors, secounselors.com. They have, you can't buy them. You have to go through a CCIM to get in there, but you can see what they've got on their market. And I could sit here and just tell you nonstop all the different places to look. But yeah, I mean, get creative and do what other people are not doing.
Yeah, I agree. It's pretty changeable, right? You have to keep adjusting all the time.
Yeah.
So, yes. And so another question. So rent is going up to more than $2,000 for one bedroom in Arizona. Wow. I want to do house hacking to generate cash flow and build my wealth, any multi-unit, and from there keep buying more in the future. Charles, you said to be patient, but no one can predict the market. Rent is climbing and house prices are going up. For how long should I wait?
Already starting. I mean, you're not going to get $2,000 increases every year in Phoenix. I mean, Phoenix, you looked at, they had like 36% year over year growth in the rent. That's just crazy. And it's already starting. I just saw a couple of weeks back that Zillow unloaded 2,000 homes in Phoenix below what they paid for it. So it's happening. You guys, it's not sustainable. Trees just don't grow to the sky. At some point, people, your customers, are not able to afford the product that you're selling. And then you've got to pivot. So these people that, and I know I see it all the time. I mean, that's where I know Trevor from. There's another vehicle called the Multifamily Shark Pool. It's a lot of fun and people get out there and pitch their deals. And I'm one of the sharks. And I look at some of these deals and I think you're crazy. You are so crazy to be doing these deals. And that's, you know, that they're making a huge mistake when you can tell that they're doing it not because it's a good investment. They're doing it because it's for the transactional income that they will get by closing that deal. When you do a syndication and you're leading the syndication, you tend to build in a 3% acquisition fee on your deals. So like I did a $7.5 million deal and I put in a 3% acquisition fee, made $210,000 at the closing table. That was a good day. Some of these people only do it for that acquisition fee. They call themselves general sponsors, general partners, but really they're nothing more than brokers. They're getting paid the same way a broker does. And they don't care whether the deal makes money or not. They didn't put anything into it. And they got their pound of flesh out of it right at the closing table. That's the worst kind of deal to be involved in. And so I've seen a lot of people doing it during these heady days, and there's a lot of gurus out there teaching people how to just, do passive income and syndicate deals and raise money for other people and keep a cut of it. That's dangerous. That's not investing. That's being a broker.
Mm-hmm. Yeah, agree. I feel like some of the propping up hard assets with inflation now is getting dangerous. That's a tricky one. It's not a protected thing at all. Yeah, sure, you're going to get the upside, but you may get hit later as well. So.
Yeah, no, that's a good point because I've heard a couple of stories where hedge funds are just going out there paying top dollar for multifamily right now just because of inflation. I mean, I just wanted to say 8.5% inflation today. I saw in the Wall Street Journal. Yeah, it's crazy. It's crazy. So that, yeah, you're going to see some of these hedge funds pulling their cash out, sticking it into a hard asset at top dollar, just because they got to get it into a hard asset, get it out of cash.
Do you feel that single family or multifamily is more overvalued? Like considering you mentioned that some of the rent increases in Phoenix and so forth, but on the other hand, single family has all that that institutional flow of capital into it.
I could not understand the institutional flow. I think BTR, built to rent communities are in trouble. I think that the glut's coming of single family and the feeding frenzy. I tell you guys, I mean, it's been years since I've seen this, but you're driving down the road on a Sunday morning and you see a bunch of people standing around a house out on the street. And there it is, the for sale sign. And they're waiting for that place to open, and they're going to have a bidding war on that house because they just can't find it. That's crazy. I love multifamily because it's logical. It makes sense. It's all about the numbers. There's no emotion involved. Single family, that's all emotion. That scared the daylights out of me. Yeah.
Okay. Any last questions, guys, before we wrap up for today?
Let me see. Is that Rick Ward? Hey, is Rick Ward the same? I think I've seen the Rick Ward over at the Shark Pool also. I'm not sure. I don't know if it's the same Rick Ward. Is it Rick? Did I see you over there at the Shark Pool?
Yep, it's me.
Okay, good.
Looking forward to seeing you again.
Yeah, I'll be there on Thursday.
I gotta watch you tonight. So here we are.
Oh, good. I appreciate it. Thanks.
Yeah.
I've never been there actually, Charles. So what is it? You guys kind of like sort of review deals and like people show their deals and you kind of comment on it? Is that how it works, or?
Yeah, there's I have a reputation of being the mean shark because I just tell it like it is. I mean, when you go right here in Boston, we don't put up with the BS. You gotta, and we don't have enough time. I don't want to see anybody get burnt. I've been through this. I've done this long enough. I know what's a good deal and what's not a good deal. And so I let people know. So it's a guy by the name of Cornelius Cannon puts it together, and people come in and they pitch it. And yeah, I guess people have raised money, a lot of money off of that presentation. And there are some good deals, and there's some good deals that I really like, and other deals that I hate to see people get involved with them. I think it's dangerous. Yeah.
That sounds like fun. Actually.
Yeah. All right, let me see.
Okay. Yeah.
I'm looking at Austin Figueroa's question. That's a long one. Austin, what you're really doing in this business is you're really putting together an offering memorandum, which is essentially, a PPM, a private placement memorandum. Those are drafted by securities attorneys. The offering memorandum is kind of like the template. There are a lot of good ones out there. You know what? I tell you something, Austin. I've seen some really good ones on the Shark Pool. You might want to see how some people are doing it. It's nice. It's very nice.
Mm-hmm. Okay.
Yeah.
So, what is the best way for people to reach you?
I'll tell you, I'm just focusing on the multifamilyos.com, TM trademarked. Because I knew people like Trevor Thompson would have stolen that thing in a heartbeat. And so multifamilyos.com, that's my new platform. We're rolling it out, but if you want to schedule time with me or somebody on my staff to see if we're a good fit, you can click on the top right and they'll book a time with you. And if it looks like we'd work together, you and I would have a call together and we just chat. All of my students have my phone number. Every one of my students works directly with me. That's the only way I'll do it.
Perfect. So, this is great. And thank you for being here today, Charles, sharing your knowledge with us.
Do I get a parting gift, Stefan? Do I get a parting gift like the old days? No? All right, fine. Fine.
Yeah. So, but thanks to everyone for joining us here today as well. It was great. Thank you.
This was nice. Thanks, Stefan. It was good to see you.